Ladies and gentlemen, welcome back to the channel. AMC Stock is ripping higher here today, up 16.5%. At one point, you were up almost 25%. And things are looking real squeezy today. And we'll talk about what is really causing this move, in my opinion. And we did get to $4.98, close to that $5 price prediction level. So we'll talk about what the next couple of days could have in store for AMC. But ultimately, why is this happening? That's probably the biggest thing that everyone wants to know, guys. So do me a quick favor. If you like to make money, let me know how many people out there are in this to win it, who want to make that bag, baby. Hit that like button and subscribe to the channel if you like to make money. Now, let's get into exactly what is going on. And we've talked about this a couple times here on the channel. I think this rally that we are seeing in AMC, GME, BBBY is because, oddly enough, BBBY's near bankruptcy announcement. Typically, when you get these kind of announcements, ever since 2020, people kind of flood to the stock in a weird way. Yes, you get that initial sell-off or whatnot, and then you can really start to see explosive moves higher. And BBBY is up 30% here today, and that's the only real reason I could point to these stocks being substantially higher today. It was not like we got good news in any substantial way. It's probably from BBBY's bankruptcy announcement, and that can ultimately help to squeeze out shorts, because BBBY did fall a lot, and it puts them in a interesting position, at least for that security. And although AMC did not fall a lot because of BBBY's announcement, AMC has been in this bottoming process and has been ready for this bounce for quite a long time now. And I think that's why, AMC didn't fall when Bed Bath & Beyond was announcing their bankruptcy procedures, because it had already fallen a lot and was in that bottoming process. But I think you're definitely getting some of that benefit from those people that are trying to chase that bankruptcy announcement, right? We've seen this many times with many companies in 2021 and even 2022, where when they announce bankruptcy, the stock will fall 1 or 2 days, and then subsequently after that, people actually start to buy the stock because they figure, hey, what's at least the fair value of this company? If you're close to that fair value, then the stock can go much higher. And arguably at, where BBBY's stock was trading at like $1.50, could you fundamentally make a case for that share price? Probably. So that, I think, is what is going on today. Now, it looks very squeezy across the board, especially with AMC stock. You typically don't see these kind of moves in the stock unless you're getting some degree of a short squeeze or a gamma squeeze, and I think you might actually be getting a little bit of both here today. Let's take a look at the Stonko tracker data here, and I first want to start off with that because the option activity is just so prevalent for this Friday and for next Friday. So what you're seeing for this Friday is a lot of calls that are now going into the money compared to out of the money. What I mean by that is, if you take a look at even this Friday, you are now seeing about 48,000 calls that are in the money and 39,000 calls that are out of the money. And on the put side, 13,000 puts that are in the money and out of the money puts at 36,000. If we take a look at the option, the actual option chain for AMC for this Friday, and take a look at the puts and the calls, let's pull up both on here and take a look at the open interest and what has really happened today with the price of the stock jumping up over key levels. And you can see on the put side, you did have 10,700 for open interest at the 350 put, right? That obviously went out of the money today. At the $4 put, you had about 10,000 for open interest that went out of the money. And at the 450 put, you had 4,200 for open interest that went out of the money. That alone is about 2.5 million shares that would have needed to be bought by the market makers. Now, for the actual call side, the 350 calls have 9,000 for open interest that obviously had to be hedged for. At the $4 strike, you have 22,000 for open interest. That's 2.2 million shares that would have had to been bought by hedge funds. 800,000, almost 900,000 for this 8,800 open interest at the 350, and then you have 16,000 for open interest at the 450, and even the $5 strike, you have 16,000 for open interest. So this is, give or take 3.5 to 4 million shares hedge funds had to hedge and ultimately buy on the open markets to oblige for these calls. So all in all, when you add this together, you're talking 6, 7, 8 million shares hedge funds had to buy here today, because you don't have a lot of days left until Friday, right? You have today, and then you have tomorrow, and then you have Friday. So they had to go out and hedge, I would say at least 5 million shares here today, and that's simply due to the option activity. That's not to mention anyone buying the stock for any other reason. That is simply the options. And what's the most exciting thing about all of this is that if we can get some bullish momentum and the markets don't fully crater tomorrow off of CPI or off of bank earnings on Friday, you have a massive option expiration coming next week, and this could only be a pregame to a potentially much bigger move. So as far as option activity for January 20th, that's not going to be this Friday, that's going to be next Friday. 22,000 for calls in the money, 447,000 for calls out of the money, 167,000 for puts in the money, and 117,000 for puts out of the money, and that is for next Friday. So on the simply just the calls out of the money, if all of these were to go into the money, that's 44.7 million shares that would have to be hedged by the market makers. If just the puts that are in the money went out of the money, that is 16 million shares that would have to be bought by the market makers. And when you're talking about daily volume in the ranges of 12, 17, 20 million shares, when you're talking 40 million shares, or even today 5 million shares that are being hedged by market makers, that is sometimes half of the daily volume that you have seen as of recently on AMC Stock. So it's literally no surprise that this is happening. We talked about the bullish indicators that were flashing as well yesterday for AMC, the RSI bullish indicator and the MACD bullish indicator, where the MACD, this yellow line, broke above the blue line, or at least started to cross above the blue line. Technically speaking, that is a very bullish indicator, showing that we were in this bottoming formation and that the trend was starting to change to be more positive. Now, the RSI is still under its neutral level of 50 at 46.07, so you're not even close to like an overbought kind of situation. You could continue to rally for a while before that did happen. And now we are approaching and pretty close to that $5 level, in which I've been targeting, that if we had a good week, that would be where I would look to see this stock go. And like I said, we hit $4.98. I'll call it $5. I'll say that we were correct on that, but we obviously didn't hold up that level at the time of recording this video. AMC stock is sitting at $4.70 per share, but here today is a little bit different than other days, because yes, you did get, a very strong open and you are somewhat squeezing to the upside, but after most days, the stock will instantly come back down. You're not seeing that instantaneous drop in AMC. Now, who knows how the rest of the day will play out? Look at this chart. There's a lot of time left, so I'm not a fortune teller here, but it looks like the stock is holding up a lot better than some of its other rally type days. The 15% up mark is weirdly enough acting like somewhat of a support. The stock does not want to go under 15% positive on the day, and I would expect this to continue, this overall bullish trend in AMC, unless the markets just can't hold it together. If the S&P 500 just completely starts to crater and things go down the tube, obviously this video is going to look a little bit later today, right? We're going to make a video at 4 o'clock going over everything that happened here today and all the numbers. But from what I can tell right now, it's looking very, very bullish. And hopefully this is just a pregame to what to expect next week. And obviously it will depend on earnings. It will depend on the CPI coming tomorrow and the Fed speakers we're going to have after the CPI. So there is that information, guys. As far as broad macro data, there's not much. There's nothing to really go over and say that's causing this kind of move. It says Barclays cuts Apple price target on concerns over demand weakness, slowing services growth. I think that's a big risk heading into earnings next week with mega cap tech stocks like Apple, Amazon, Google, Tesla. They're all going to be reporting earnings next week. If those earnings are bad, that's what you really got to watch out for, guys. Have they fallen enough to offset, demand slowing down, that risk in 2023? But the Nasdaq is up almost 1% here today. S&P 500 up 0.56%, and the Dow Jones up 0.19%. Russell 2000 up 0.75%, and the VIX is actually up today. So keep that in mind, guys. The VIX has been sitting almost at a 10-year low, and it's up today on a 1% green day on the Nasdaq. So there is a little bit more of that protection that is starting to be placed on the market. So that'll be interesting to see how that plays out by the end of the day. Nonetheless, if we take a look at AMC, the Interactive Brokers short availability sitting at 0 shares available, 99% cost to borrow here on the day. Cost to borrow average of 274.09%, cost to borrow max 293%, and cost to borrow minimum at 236.5%. The live short interest of free float sitting at 21.59%, and the amount of shares currently sold short, 111.2 million. It says negative 61,000 on the day, indicating that about 61,000 shares have been covered here today. I really don't think this is much of a shorts covering kind of day. Doesn't really look like it, considering the amount of options that went into the money for this Friday and even for next week. You can kind of explain where the volume's coming from based off of that. It's not like we're seeing or setting up for a 200 million share day. I mean, you're setting up for like a 30 million share day when you've typically sat at in between 10 and 20 million shares. So you can explain where the volume's coming from simply based off of the options. And like I said, guys, I think even the rest of this week and next week could be big due from that. Can you say AMC to the moon? AMC to the moon, baby. Say AMC to the moon. Say go AMC.
Go AMC.
We got it. Look at that, baby. Go AMC. I'm bullish. I am bullish. So that is going to be it for this video, guys. Hit that like button if you like to make money. If you want to see your position in AMC blow up, as many people see this video, it does incrementally help to push the narrative and the data behind this trade. And obviously, I'm not a financial advisor. I'm a guy working towards that. But even if I was a financial advisor right now, I cannot give you personalized financial advice. So you're going to have to come to your own conclusions. Do what is best for you and your family right here. But I think if you have been in AMC, it's looking a little bit better now than it did yesterday, guys. So that is it for this video. Like I said, guys, do what you do. But most importantly, enjoy the rest of your day. And I will see you in the next one.